everyone. Welcome to 2022. This is our first Bank It or Tank It of the year, and I'm excited. I've been laying out some new insights that we're going to be featuring in these videos here over at True Options Master. So a lot of you already have an understanding of what we're about to talk about today, the extra layer that we're adding into it. But first and foremost, I just want to thank you all for a great 2021. We covered a lot of stocks, had a lot of big gains, a lot of great performances just by looking at the charts, just by looking at using my profit radar, these different quadrants that a stock can be in, and looking at the key levels to watch. We were able to make some great calls, and hopefully you all made some money off of that. But I'm hoping they make even more money for you all in 2022 as we add this extra layer, and that's going to be unusual options activity. Now, this is something that I've been writing about over at True Options Masters for months now, but I just think it's an extra layer that we can add to this just to see the sentiment, just to see kind of how the trades are coming in on a shorter time frame, maybe to give you some trade ideas and that sort of thing as we take a look at these stocks. So nothing major, only a couple of these stocks I even had unusual options activity this week because I got 5 stocks that we're going to be running through today. So big thanks to everyone who sent in stocks for me to take a look at. I'll be featuring more in the coming weeks. And before we get started, just take a moment, scroll below, click subscribe if you haven't already. Make sure to give me a thumbs up if you like the video, and just leave me a comment. Let me know what stocks you want me to continue to feature here in these Bank It or Tank It videos. Any stock that you want to list, I'll add it to my list that I have, and then we'll continue to go through this list and talk about these stocks in the weeks ahead. So with that said, let's dive into our first stock today. It's ChargePoint. And this one's a big wedge pattern, falling wedge pattern, and you can see that, I mean, it's going through the whole motions here on our profit radar where we go from leading to weak to improving. Then this one went back to lagging, improving, back to lagging, then finally improving, leading, then weakening. Now we're back to lagging and back to improving, but we see the weakness and improving. That's not a good sign. We typically, like you see here, when we go from lagging to improving and we're moving higher, those are the starts of some pretty big runs. And that's what we tend to look to catch if we're trying to jump into a stock from the lagging quadrant here on this profit radar. Where we're at today, we see that it's weakening, shouldn't use that word. We see that it's falling as it's in the improving quadrant. So that's bearish to see. It's enough for me to basically have this stock on my tank it list for now. Now, you see that it's in a falling wedge pattern, so I wouldn't blame you if you already own the stock, or if you're looking at the stock, it has this potential run up here that it can stay within the wedge pattern, still seeing a 50% run, which is a sizable jump, and it just kind of stays within this consolidation pattern. The issue I have with that is that these trend lines can be pretty much drawn however you want. That's the thing with trend lines, is that it takes an eye to just kind of see the key levels on the price chart. And I can tell you that while this area that I have it drawn at right now is one way to kind of stretch it, this is the stretched version. So you can just tighten this up a little bit and you'll see that now we're connecting more of the bottoms a little bit cleaner, and we broke below that. So that's a downward break on this. And then another way that you can look at this is almost as a horizontal trend line from this low start before the big breakout. A lot of testing here along this pullback. And then we had a brief dip below it, bounced back above it. Now we came down, broke back up below it again, tried to get back above it and failed to. So it was a break to the downside, and we saw the stock drop sharply from there. Now, this still gives you another upside run up to $20 a share before you hit this resistance level. So you can still see some short-term moves on the stock, but you see the big move that we had back here at the start. So this was a big run up for the stock, and that's what a lot of people who own it are waiting for. They're waiting for the stock to run back up to the high 40s. And right now, I just don't see that happening. So this is going to be on my tank it list for today. Now, that could happen in the future. And of course, these key levels, as it goes above those, that's when I would flip, put it on my bank it list, and be ready to ride the next uptrend. But for now, it just looks like there's going to be a little bit longer that you'd have to wait, maybe some more weakness, more drops to the downside. So this is one that I'll have on my tank it list for now. This stock actually came up from somebody who's looking at possibly selling covered calls on the stock. Now, they bought it at a certain price. It's dropped, of course. You can see here if they bought it pretty much anywhere along this time frame, they're at a loss. And they're talking about selling covered calls. So the thing with covered calls is that you're basically telling the market that you want to sell the stock at that price, at your strike price for the covered calls. And that's the way you got to look at it. If you have 100 shares and you sell one contract, you're just willing to sell those shares at that price. So in this drop, let's say you pick $20 a share, for an example. So you're telling the market that you want to sell it at $20 a share. You probably got to go out a couple months to generate some premium that makes it worth you even thinking about selling that option. And then over that time period from now till then, your upside is limited to $20 a share plus the premium that you collected. What that means is that if the stock soars up to some big move like we saw back here, which clearly it has the potential to do, will it happen again? Who knows? But it has the potential. So by selling this at $20 a covered call, if this stock rips and goes back up to the 30s or $40 a share, your gain is capped down here at $20 a share. So a lot of times when I go to sell covered calls on a stock, it's either at a point that I truly want to sell. Like hands down, if this stock actually hit that price, again, say it's $20 a share. If you were really looking to sell ChargePoint that you already bought, and when it got back up to $20 a share, you were absolutely ready to sell the stock. Regardless if it was shooting up to $40 or $50 a share, you were happy at $20 a share. Then by all means, you can sell a covered call at $20 a share. But this is a stock that you're holding it for the potential that you think that it could make a big move higher, then it's not an ideal candidate for selling a covered call. You could look at maybe buying a protective put, which is a flip side of those trades. It's where you buy a put option down here, maybe a $15 strike. And what you're doing is you're limiting your downside to the $15 plus the premium that you paid. So that your downside would be around $14 a share. So that's the most you could lose over the duration of that option. And if it drops below that, then you have a few different ways that you can get out of that trade to lower your cost basis and to be in a better position for the overall trade. That's why I kind of like using that on more volatile stocks. But other than that, if you're adamant on selling covered calls to try to generate some income, just keep in mind that that's the price that you're willing to sell the stock for. Now, before we move on from ChargePoint, we talked a lot about it today, but this is like our feature stock, has a lot going on. So we wanted to take a look at this platform on Flow Algo, looking at the sentiment for the options trades. And this is basically pulling up. I'm looking at the last month. I went from December 1st up till today, just to see what kind of option trades we're seeing. And you can go ahead and to the premium side, and we can see that there wasn't a ton of premium put on these options. We're not seeing millions. And this is a smaller stock. It's not like Apple or a stock like that typically sees millions traded in options. But you can see that the most kind of unusual one that they highlighted was this one. It's because it's super short term call options on the 14th that expired this Friday. And they came above, they're out of the money. So they're above where the stock was currently trading at the time, $15.76. They bought the $17 strike. So very aggressive trades here. But only $20,000. So in the scope of things, it's not an enormous amount. It's something that people would be happy to throw some money on and see what happens. Roll the dice with a stock like ChargePoint where we saw the volatility. But overall, very bullish on the sentiment. We only have one put option that came up on these unusual trades. And again, this is not all of the options activity for the stock by any means. These are just some that Flow Algo, their algorithm, basically flagged as potentially unusual, kind of out of the norm for ChargePoint. So pulled up several, but the put option, all January 21, said the short-term stuff is a lot of what they like to flag, especially when they're in the tens, 20s, hundreds of thousands of dollars on these trades. But we can see a May 2022 block trade here. This was back when the stock was up around $19. They were buying pretty aggressive calls, spent $80,000 on those out to May. So they had plenty of time with that trade, but so far it's not working out. We see that these were calls going back to $23 a share back on December 1st. They were throwing $122,000 on them. They expire on the 21st. Those are likely to expire worthless. So this kind of goes to show you, though, that not all of these trades are going to give us that insight that maybe we're looking for. Overall, we see that people are bullish on the stock. But something that typically signals a bit of urgency are sweep trades. So we can see that here, these are basically just, they wanted to get the orders executed quick so they could get in. So this trade, a lot of times these people may not hold for too long. They're just trying to get in and out, but it is good to see that most of these trades are coming in on a bullish side for ChargePoint if you're bullish on a stock. But again, sticking to the chart, which is going to be our kind of key indicator on ChargePoint. We see it's down to $16 a share. They're betting on a bounce in a very short term. We're typically looking at weeks. So that's why it's on my ticket list today compared to that. So our next stock is Danimer Scientific. And this one we had two readers asked to take a look at it, Tasman and Dennis. So as we pulled up this chart, You see the big run, which I'm sure is what got it on everybody's kind of radar back in 2021. Since then, a lot of volatility. Now, one of the main things I wanted to point out is that so it's a falling trend channel again, broke below that, and you see that the gap shows that there was some significance here, where this was a real support. Gap below that now had a little bit of a run up, not even quite testing it, but we're seeing the same thing we saw with ChargePoint. It's in the improving quadrant on our profit radar, but it's falling to the downside. So it's going lower when it's supposed to be heading higher, and that's enough to put it on my tank it list for today. This stock is a tank it stock, and it's really because of that right there. It's on the bottom side of this downward trend channel, broke out to the downside of that, and is trending lower in the improving quadrant. If this would have headed higher, I would have been bullish on the stock and it would have been on my bank it list. Instead, we saw more weakness, and now I'm expecting it to kind of drift around and then head even lower from here for now over the next few weeks. So tank it stock. Let's see if there was any options activity on Danimer, DNMR, and you see that there's no options data, but over here on the right, they have do this thing called equity blocks and dark pool prints. So these are not dark pool prints. These are just equity blocks. You can see 1 million, 1 million, 2 millions, 3 millions, a million. These are just large equity trades where people are just coming in. Doesn't really tell you if they're buy or sells though, but the kind of intuitive thing is to look at the stock and how it's trading to figure out where the money's flowing. So since it's heading lower, you see that most of this was on the 17th, 12/17, almost 20 million here total on that day. And price was slowly drifting lower, but since then, we saw on the chart, things rolled over, it's been going lower. So we would look at this as more selling pressure, and it's negative for the stock. It's not a positive outlook right now. So equity blocks are showing us that no unusual options activity on this one for today, but it was enough to still give us some insights there about taking just a look at that. Now, our next one here is STC, Stewart Information Services. Now, I like this. This was from Jim. He threw out two stocks, and we're going to look at the next one too, but I liked it because they were, it's not the same charts that we were chasing with ChargePoint and Danimer Scientific. Look at this. Is a very long, steady uptrend. Got a little ahead of itself there. You can see that this is basically a consistent rise through that, all the way up there, and then it got a little bit ahead of it. Now we got the pullback, some more consolidation, and I think as we go through this consolidating period, we can get a breakout to the upside of this. This is definitely an area that it's an ascending triangle pattern, nice support, key resistance right there. Could easily break out to the upside of this here over the next few days in the short term. So this stock, I like that it's heading higher. It's going to be on our bank it list. There's actually no unusual options activity or stock trades for this one to pull up, so we don't have to go back to flow algo for this. But just looking at totally, this is almost night and day from the chart before. This is in, we went through the whole rotation here at leading, weakening, then lagging, improving, heading higher. Now it's been trending in the leading quadrant. So technically it could go weakening and lagging and break below this. So that is something to watch. But as long as it's above this key support right here, this is going to be on my bank it list. If it falls below that, I put it on a tank it list for a little while and keep an eye on it. And then the other stock was ChargePoint Homes. So we're in the housing market, and this is another one that just very nice rise here over the last year or so. Steady uptrend, nice price trend channel to the upside. And when we see where we're at on a profit radar, it's lagging quadrant, but it's holding above the support while it's in there. Still has some room that it can drift lower before we start to improve and head higher again. So another stock on my bank it list for today. I'm looking for shares just to steadily climb from here. Maybe nothing crazy, but at least you have a strong support line that you can keep an eye on. And you know that if it breaks below that, it's probably going to fall 10, 20% lower. So that's something just to have on your radar, to watch for this just to bounce back up to the top of this trend channel and put it on your bank it list for today. And again, no unusual options activity or dark pool trades for this or equity blocks. And that's going to be the case for some stocks. They just don't have all that data and information that's out there. But our last stock is a meme stock, GameStop. And this one actually came up from Brian, and he called them out. He said they're meme stocks. He was just wondering what my take was on them. So we know that GameStop, it is a meme stock. Look at this. I mean, it was a short squeeze, epic short squeeze, sent it to the moon, came crashing back down. Now, this was expected. This is where I'd expected to even settle around $20 or $30 a share. All this extra stuff is out of my comfort zone, I guess you could say. This is in no man's land at this point. This GameStop has no fundamental technical valuation, nothing that really puts it into this quadrant. Even with the short squeeze, I get that maybe they just didn't wipe out enough of the shorts and they think that it's going to go higher again. But by this point, I would say Wall Street's probably caught on. They've been able to short a lot of these peaks, a lot of these big run ups, and make a lot of money back to balance their portfolios, regardless of what the short position shows in the, on the platforms right now. But you see it had a big wedge pattern, broke below that. Again, to go back to ChargePoint, it's in the improving quadrant, but heading lower. So we're seeing that weakness. And again, you can just go back and see that when it's heading higher in the improving quadrant, out of the lagging, we tend to see these big runs up. We tend to see these big moves higher. And that's exactly what we would like to see, not making lower lows while it's supposed to be improving, relatively speaking. So that's a bearish sign to see. And it's why GameStop's going to be on my target list. I'm not a big fan of the meme stock trades, so I'll admit that there could be some still white knight event that comes through and just sends this thing soaring even higher and lets people one last chance to get out. I just see it as increasingly unlikely the further we go on. You see how long this lasted so far. I mean, this was back January 2021 when it had the big pop. So we're a full year ahead of that. And, there's nothing showing, nothing out there that would really show me that this has the potential to do this again. Instead, I'm expecting it to crash back down below $20 a share is really where I think this will end up settling. At the end of the day, it doesn't have to. And I'm not calling for that over the next couple of weeks, but just the way it looks right now, it's definitely on my tank list. We see the weakness that's coming through. But with GameStop, let's see what, some option trades on this one. So let's see what the options market was looking like here over the last month or so. And it's pretty even. Yeah, bullish overall. Put to call ratios 0.79, 44% is in the put flow, 56% was into the call flow. And again, a lot of short-term activity here though. Some of these already expired January 7th. Calls inputs December 17th, December 10th. So this still just looks like a trader's type of stock. They know that there's whipsaws. They know there's going to be volatility. We're not seeing the unusual options activity come in on this one out to, even March, April, May, or anything like that. These are all just trying to pick these little quick swings in a stock. And at that point, it's anybody's guess. You're trying to use some technical indicators and everything, but this is a stock that's kind of going beyond all that. And now it's just kind of trading on a whim, and it can head much, much lower. You'll notice that at least the more recent ones, put options here on January 10th out to January 14th, this Friday, and January 28th. And the January 28th one, that's a bit of a higher premium, almost $1,956,000. And it was executed as a sweep. So those are some pretty good signs that this is some activity to watch, to follow here over the next couple of weeks, to look for this to head lower. And it's kind of line up with my tank it sentiment. So this one, even though it's bullish, it's only at the 59 level. So it's not a screaming bullish. It's just barely over according to their measurements. So nothing here that's really going to flip me from my tank it side. And in fact, there's actually more confirmation that I would be bearish on the stock, seeing those calls on the January 10th for that January 28th expiration. Almost $1 million betting on a stock to see a pretty big drop. So that's all for my tank it or tank it today. I know we're throwing a lot at you with the options activity in the stock charts, but our goal is that this will just give you a bigger picture of these stocks that we're going to be taking a look at, that you all want me to take a look at. Again, leave me comments. Let me know what stocks to feature in the coming weeks. But by seeing the options activity or any equity trades along with the chart, it just gives us this total picture of how traders are trading the stock as it goes along. And we can see where these prints are coming in. Just like with GameStop, we see that there's $1 million bet here on the stock to fall over the next 2 weeks. I mean, that's pretty significant. That's something to keep an eye on. And as we go through this from week to week, we'll see a lot more activity and a lot more information that you can track and see how these things are really playing out in real time. But for now, we're sticking to our fundamentals. We still have the price charts. We still have the key levels to watch. We use my profit radar. So a lot of information. And I think overall, it's going to have us sitting up in a pretty good spot as we continue to follow these stocks throughout this year. So that's all for today. Again, leave me a comment. Let me know what stocks you want me to feature. Click subscribe and give me a thumbs up if you enjoyed the video. Till next time, I'm Chad Chu.